Hey, do you know what a dividend aristocrat is? It's a stock in the S&P 500 that has increased its dividend for 25 straight years. And if you wanted to invest in a basket of all of those 69 companies in one shot, you'd probably want to buy the S&P 500 Dividend Aristocrats ETF from ProShares, ticker NOBL. Now, while it's had a noble 146% total return since its inception on October 9th, 2013, it still underperformed the tech-driven S&P 500 by 42%. Now look out, babe, because the king is back. Well, hot off the press, the Dividend Monarchs ETF, ticker KNGS, just began trading on November 2nd, 2023. So the Roundhill S&P Dividend Monarchs ETF is the first ever US-listed ETF that tracks the performance of the Dividend Monarchs Index, which is a group of US blue chip companies that have grown their dividends for 50 straight consecutive years. And if you're not familiar with Roundhill Investments, they really do have some of the most fun tickers around, like the video game ETF Nerd, the sports betting ETF Bets, the digital infrastructure ETF Byte, and of course the cannabis ETF Weed. Now, did you know that a monarch is a ruler who has the highest authority, while a king is a specific type of monarch who inherits their position in a family-based system of rule? So all kings are monarchs, but not all monarchs are kings. And it's these dividend kings like Procter & Gamble, Johnson & Johnson, and PepsiCo that have withstood economic storms including Black Monday, the 2000s tech bubble, the 2008 financial crisis, and the 2020 COVID-19 crash with their dividend growth streaks intact. And as most of these are indeed the epitome of defensive stocks, the index leans heavily on consumer staples, industrials, utilities, healthcare, and materials, and has no exposure to information technology or communication services. As of October 2023, the Monarchs Index had a dividend yield of 3.51%, and because these are some of the best businesses at generating profits from shareholders' equity, they have a much higher return on equity than the S&P 500 index, which also makes these stocks less volatile with an average beta of 0.78. Hey Russ, what the heck is a beta of 0.78? All that means is that for every dollar the market goes down, the King's ETF will go down about 78 cents. But on the flip side, for every dollar that the market goes up, the King's ETF is probably only going to go up about 78 cents. And now you know what beta is. As of this recording, there's only about $300,000 of assets under management spread across 36 holdings, and there are currently 10,000 shares outstanding. Now, Roundhill is a business, and they're not gifting you this ETF out of the goodness of their hearts, so they charge an expense ratio of 0.35%, but don't worry, you won't receive a separate bill for this. It's automatically deducted from your investment's value on the back end, as these expenses are calculated as a percentage of your total investment and help cover the costs of managing the fund. An interesting side note is that under normal market conditions, the fund invests at least 80% of its total assets in the common stock and real estate investment trusts that comprise the index, and the fund will invest at least 80% of the fund's net assets plus any borrowings for investment purposes in dividend-paying securities. And in order to be eligible to be included into the index, a security must have a market cap of at least $2 billion. They must have an average daily value traded greater than or equal to $5 million for the 3 months prior to the rebalancing date. And of course, the security must have increased its total dividend per share amount every year for at least 50 consecutive years. So the index is also reconstituted annually, rebalanced quarterly, and will make the corresponding changes shortly thereafter. And if you want to grab that first dividend, it goes X on December 27th, 2023. So make sure to own the shares by the end of the day on December 26th, and you will be locked in. And if that yield is 3.51%, I would guesstimate that the fund will pay about 88 cents per share per quarter as of this recording, which is also the first day of trading, and the King's ETF had a closing price of $25.10. My thought and opinion is that many of these Kings, they don't have a very high yield, and they're really just token increasing that dividend to keep their dividend streak alive. So there's likely going to be a higher weighting toward companies like Leggett & Platt and 3M to make the fund attractive to investors, especially those who are passionate about passive income, which that could be risky in the event that some of the higher yielding kings cut their dividend and are booted from the index. Then the yield would likely suffer. But if you just want to own all the dividend kings in one shot, in one place, without any research whatsoever, then this may be the right ETF for you. But if you like the challenge of trying to find the best of the best like I do, then this ETF is probably not going to excite you all that very much. So let's hear it in the comments below what you think about the Dividend Monarchs ETF, ticker KNGS, from Roundhill Investments, and if you would invest in this ETF. And speaking of quality, I put together a 100 plus mega REIT analysis spreadsheet with a focus on debt profiles in this floating little box next to my head. You might want to click it and check in and see how some of the REITs that you own are looking these days. If you like this video, please hit the thumbs up button and like and subscribe. Click that and I will see you there.